All right, welcome everyone. It's the SaaS Founder Show, back again for another week. Andy, how are you doing?
I'm doing well. Just getting ready for Valentine's Day. I got you some flowers, some candy. They should be on their way. So hopefully you'll enjoy those.
Yeah, it's actually my wedding anniversary today. So
ooh, look at you.
A lot of flowers and stuff this month. So yeah. So anyway, today I'm excited we have a guest, Jessica Willis from PocketNest, and I'm super excited about hearing from her. Her SaaS is a little bit different than some of the ones that we've had, so I'm excited to hear her story. So let me go ahead and bring Jessica on. Hey, Jessica, how you doing?
Hi, guys. Doing all right. How are you?
Awesome. Really good. So thank you for joining us here today. Before we dive in and learn all about PocketNest and how the journey started and all of that, I would like to hear a little bit about if there's a possibility our paths have crossed.
Oh, interesting.
So it looks like you went to Loyola Chicago.
Yes, I did. Yes.
You spent any time at 25 East Pearson?
Yes.
Okay, so I used to be my first job right out of school was at Loyola. I worked in that building on the 7th floor. I was the IT operations supervisor, like near the academic computing and all that.
Amazing.
And it was from like the end of 99 to like 2002. So it looks like
that's
we might have, and it's not a big school, right? So,
yeah, that's incredible. I want to say I thought you looked familiar. Let's go with that. Let's go with that. When you put those dates out there, you make us a little bit older than we try to be when you date things.
So, I probably missed you because you were there much after.
Because I'm so young.
Long after, yeah.
Yeah, right. Got it. Thanks.
But so very cool. We appreciate you taking the time to spend with us here. I think just to open it up, tell us a little bit about PocketNest. I'd love to hear about what you've done, what you've built.
Yeah, what our incredible team has built. So at PocketNest, we do comprehensive financial planning or financial wellness. There's kind of a lot of words that people use right now, but really this comprehensive platform. We do that for Gen X and Millennials, and we do that by licensing our software to financial institutions. So banks, credit unions, investment advisors, benefit plan sponsors, 401k providers, insurance companies, other fintechs, really any company touching personal finance can be a customer of ours.
Very cool.
That's awesome. So I always like to start with origin story. How'd you get into this? What did the, ideation process look like? And, what was the before and after of the startup experience?
Yeah. So the before, so the origin story, the background, I've got 20 years of experience in wealth management, doing investment advising work, all for high net worth individuals, because that's the way the industry is. You need a ton of money to get really good, independent financial advice. The origin story is there's two trends I saw a lot of. The first was I started to get really kind of that next generation of client in, those late 20-year-olds, and the way they wanted to be served was very different than the way my baby boomer clients wanted to be served. Baby boomers are happy to come into the office once a quarter while I would read them every number on their performance report. And of course the millennials are like, I don't want to know if my small cap value fund, we're already bored with this conversation, right? So that was kind of the first trend I saw, was next gen asking for something different. The real origin story was that my peers were constantly asking me to take them through the same process I was doing for my clients. So I was getting asked by friends, in fact, developed this sweet little reputation that all you have to do is take Jessica out to lunch. She'll give you all the free advice that you can listen to in an hour. And the questions I kept hearing were the same. It was, okay, level with me. What do I actually need in life insurance? Don't tell me something, how do I save for college for my kids while saving for retirement, while building a cash reserve, while paying down the mortgage? Again, these high level comprehensive financial planning questions, these questions that, hiring a robo advisor or Mint or Acorns can't necessarily answer.
Mm-hmm. Yeah, that area in between, it's interesting, and maybe you can touch on it, and it's part of your vision. But I have a number of friends that are in financial planning, and they're typically targeting people at 55 and older. So they don't even want to talk to the millennials or anyone younger. Right. Did that factor into kind of your thinking in developing something like that?
Yeah, for sure, Andy. I don't know what the stat is now, but 2 years ago, the stat was only 18% of advisors were actively marketing to millennials. So they're broadly ignored. And the Gen X and millennials by the end of last year had $40 trillion in assets, which is a huge, huge amount of money. 98% of millennials will fire their parents' investment advisor upon inheritance. So when you look at the fact that they're being ignored and they have this huge pot of money, and they're going to fire mom and dad's advisor, this is obviously a recipe for developing a new tool. And in that basket, we're not trying to replace the advisors by any means. As an industry, we've been set up to not be able to serve a lot of people. And so, yes, we've looked at the 55 and older, and we look at people with over $1 million in assets. It's really hard and it's very time consuming to get to know everything you need to know about someone to give them independent advice. And so it's resulted as an industry that only serves those ultra high net worth. And so the tech we've built, again, we don't want to replace the advisors. We want to give them this tool that allows them to scale, serve more people, get to these really important, intimate conversations faster.
So you're really selling B2B and not B2C,
right?
And helping them really use your platform to then engage with those consumers.
Right, exactly. So we consider ourselves a B2B2C platform. We license these institutions, we white label and put the platform and the technology in their brand, put it inside the mobile app of the credit union or the broker dealer or the insurance company, whoever the customer is. And then we partner with them from an engagement standpoint to say, here's how you get great engagement. And then, they push the platform from there.
So how did you get launched? Do you have a technical background? Were you involved in building it? Did you raise any money? Did you find a co-founder that had a technical background? How did you actually make this a reality?
Yeah. I think the answers are no, yes. So no, I do not have a technical background. How did I do it? I have incredible mentors and advisors around me early on. I still do, but they were really important early on because, I'm always quick to say I don't know what I don't know, and had this really great help from advisors and mentors. Yes, we raised capital. We just closed our second round at the end of last year. And then I have an incredible team with our executive team includes a CTO who, has led the development process, also a chief marketing officer who really gets into that engagement. And then we have a great team of developers, both in-house and out of house, that have actually built the software.
It's fantastic.
So love to hear more about the mentorship, kind of what that looked like. Who did you lean on? That's something that we commonly hear from founders that are on, just the importance of the mentors that early on until current day. Typically, we hear a lot of great stories there. So we'd love to hear a little bit about some of the people that you leaned on.
Yeah, that doesn't surprise me that you hear that because I don't think anybody should or would be able to say they built something on their own. The mentors I found early on came from two places. One, just cups of coffee of saying, I don't know what I don't know. Can we go strategize a little bit? Just meeting people that way, back when we could meet people over cups of coffee. And then the second place is through, I would say, a community. And that community, for me, the first community was through an accelerator called G-Beta Detroit through Generator. I don't know if you guys know Generator, but they're really, really great people. So I joined a pre-accelerator in the Detroit ecosystem, and that was all I needed to see, okay, there's people out there to help people like me who have ideas, take them from ideas to more than ideas. And then from there, I joined a couple other accelerators, but that's always my advice to really early founders is find your community, find your people, find your mentors.
So did you find the accelerators valuable, and are there tips for other folks that maybe are starting up a business looking at accelerators to get the most value out of those experiences?
Yeah, I did find, I would say all of them, I definitely got something out of all of the pre-accelerators and accelerators and, boot camps that I've been a part of. Some were definitely stronger than others. I would say, you have to vet them very, very deeply. I don't think, anytime I saw you have to pay to be a part of this accelerator, I was sort of turned off. That's not to say that model never works, but I think there are thousands of accelerators and pre-accelerators and programs and boot camps out there for founders. And I just would caution everybody to you just have to do your research beforehand.
What would you say you look for as the type of mentors that are there, the other companies? I mean, my assumption, and I always tell people when they're looking for funding, is to find, people that can give them capital, but also other benefits, like they've got industry connections and all of these other things. Would you say maybe not just with fundraising, but accelerators looking for, like, if you're in the financial space, you want other companies that are in that space or mentors that have been there before? Was that something that you had thought of, or?
Yeah, I think it's very specific to a company and the stage. So the pre-accelerators I was in the beginning, so G-Beta for one, I was in no position to be a part of the Endeavor community, which I am now. So, that was 2 years ago. So I would say, just you have to do your research. You have to recognize that it's not only looking for a fit based on all of these things like mentors and personalities and other companies that are in it. It's everything, but it's also your stage, your stage of what you need. So G-Beta was so great to me early on because they helped me create and deliver a pitch deck, my first live pitch, which is a really scary experience the first time you do it. And an executive summary. So those were the 3 tangible assets that I walked away with. Now, I mean, I've done, hundreds of live pitches. I've sent out that executive summary thousands of times. And so if I was looking at an accelerator now that offered those things, that's just not a fit from a timing standpoint. So yeah, I would say it depends on where you're at from a phase, from a timing, and what your needs are.
Yeah, I know a lot of entrepreneurs struggle with that, like live pitch and the whole creating a pitch deck, whether it's for competition or investors. Any secrets that you found going through that process to make it a little bit easier?
Yeah, it's never easy. I think the live pitches are like I said, I've done hundreds by now. I sort of enjoy them. There's definitely a dopamine release. And it's invigorating to, be done when you finish. But I would say that first time I went to do a live pitch, I was walking around the block beforehand, trying to get in the right frame of mind. And I was thinking that I don't need to do this. I'm going to quit. I don't need to, this is not worth it. Nothing's worth having to go on stage. But, somehow I got on that stage and had fun with it. I mean, that's something I would say is to anybody doing live pitches, have fun with it. It's a hard thing to do. If you mess up, laugh, call it out, just be authentic and move on. I mean, it's a hard thing to do.
I love that.
Yeah, you mentioned your team a little bit. You said, you got a team of great developers. You mentioned the CTO, a CMO. I would love to hear just a bit more about the team, but how do you find the right people, and maybe who is that employee number one? How did you prioritize bringing that person and then the rest of the team on board?
Yeah, it's not easy. It's not fast. Anybody who makes it look easy is there's just more to it. Recognize that. My first hire was our lead engineer, Vlad Ochari, who's just awesome. He actually came to us through a Hacker Fellows program. So there was a subsidy there from our ecosystem, which really, really helped because in the beginning I had such a low budget. I was bootstrapping in the beginning. And then we raised a little bit of capital. So he was our first hire. He's still with us. He's a huge part of the team. He's amazing. So, but from the beginning, I was told you're not a technical founder. You need to find a CTO to support you. And so there's definitely this, I want to say, a lot of people could laugh about this. There's definitely this non-technical founder situation where we're kind of walking around saying, hey, I'm looking for, a CTO or a technical co-founder. And you can't just find that person. It's really, really, really hard. And I think back to a couple of people I maybe almost started working with wouldn't have been right. So it took us, it took about a year and a half before I started working with Chris Washa, our CTO. The story there is great. I had an investor who knew I was looking for a CTO, and months before I had met Chris as an intro through this investor said to me, I know who your guy is. He's absolutely, the best for all these reasons, but he's probably not ready to leave his current job. And frankly, you're probably not ready yet to even to hire him and pay him, but also just from where our company was at. We were just so early. So, then I met Chris a couple months later, and we went through maybe a 6 month, like, we're not ready, you're not ready, but let's keep talking. And then got the call in August of 19. Yeah, that he said, okay, I'm ready. And I said, okay, I'm going to go do some fundraising. I got to go and raise some capital so that we could afford to bring him in. And and now we keep going, having a blast.
Where did you find the funding to hire that, developers, technical founder, or technical folks that are sometimes a little bit more expensive?
Yeah. The usual venture route. Like I said, I bootstrapped in the beginning. I was very, very confident in the beginning that I didn't want to raise money unless I knew I didn't want to spend somebody else's money to make bad decisions. So it took me about a year before I raised capital. So did some bootstrapping in the beginning, meaning I put my own money into what we needed and just kept talking to, really validating, I think, the idea, validating what we had, validating that there was a market and customers. And so, I just knew it's not my personality to raise capital and spend someone else's capital to see if something wasn't going to work. So along that process, I met investors and mentors who said, okay, well, when you're raising capital, we're ready when you're ready. So I was able to go back out after that and say, remember when you said that to me, we're ready, we want to bring Chris in. And then it came together pretty quickly from there.
That's great. Yeah, I'm curious, the whole concept of technical founders. So I think we've had almost 50-50 on this show of technical founders and non. I'm curious from your perspective, do you think it's a benefit to not be burdened by that? Do you think it's a roadblock to not have that technical, or did you have to shift your mindset through the process?
I think there's no right answer. And okay. I hate that. I think there is there's definitely the message from the startup world that you need a technical co-founder. You need a technical person to help. My answer to that is sure. Like, that'd be great, right? If everybody who had a great idea could find the missing pieces in their backyard. That does not work like that. It doesn't work like that. It took me a year and a half. So I would hate for anybody to think I would hate to have for me to have lost that year and a half just because I was sitting around waiting for the right person, who, by the way, I never would have gotten had I not built out a year and a half of validation and proof. So I think the answer is, if all the pieces fall into place on day one, amazing. But I don't think that happens. So you have to keep going with what you have and then, make it work from there.
Turning the focus to the product a little bit, I would be curious to hear what your initial vision was and how that compares to, what it looked like when you first launched it, when you had an MVP, and then kind of how it stacks up with where it's at today.
So the first MVP was a 20-page survey, I guess, that I had 3 friends go through with me. So God bless those 3 people. I had to buy them coffee, and it was a 2-hour process of them literally checking yes, no, to kind of see if it works. So the product has come a long way since then. I think the only big change isn't the right word. I think that I always get asked the question, what pivot did you have to make? And I think that's kind of what you're asking, Tony. We didn't do a big pivot, but when I started with the idea that first year, the question was, can we create technology that, can anybody create technology that can replace what I do as an advisor? So I started to pursue that question and saw very, very quickly that the answer is no. At the end of the day, people still want handholding. They just want a lot less. Again, back to that, prior thing I said, they don't want to sit across from me while I read them numbers on their performance report. There is a much more efficient way advisors and banks and credit unions can do their job. Again, with their job being get to those intimate conversations to be that financial trusted advisor sooner. Our technology just helps with that process, right? So I think that the question in the beginning was, can we go direct to user? Found out very quickly we don't want to go direct to user. We want to go to the institutions who have the audience, have the problem, give them the solution to engage with that next gen to bring financial wellness to the masses. I mean, that is our mission as a company, is how do we bring financial wellness to the masses? And so I think we can do that by deepening the relationships between end user and institution.
How'd you get those first couple customers? Was it cold calling? Was it some sort of marketing connections? How did those first couple customers come on board?
Yeah, the same way the first couple investors came on board. It was from doing the work for 12 months before, having cups of coffee with everybody and hearing, interesting, we have that problem. When it's ready to be used, we're interested. So it was networking.
Yeah, that's great. How about as you've evolved, how has your customer acquisition changed? Have you gotten big into marketing, or is it still very personal connections and going through that process?
Yeah. We haven't paid a single dollar yet to marketing, which, or I should say to paid marketing campaigns, which I'm so proud of, because through, so our chief marketing officer is Ashley Craven, and through the work that she's done, as any good startup, she's really, really, she's sharp about how do we do what we need to do with a little spend. Scrappy. How are we really scrappy? So I'm really proud of the fact that we haven't done that yet. Customers now come from a couple places. So definitely network, definitely referral. I've done quite a few speaking engagements to the credit union community. That has helped. And then we have a reselling agreement with a major credit union solutions organization, Credit Union Solutions Group. They're one of the largest credit union service providers in the US. And so they've been a really, really good partner to us too.
So I'd kind of be remiss if I didn't ask, given your platform and, target audience, about Reddit and GameStop and just, again, it's not necessarily about that situation, but the mindset of, that's changing in investment and, like you're almost saying, democratizing it. What's your opinion about what's going on and how that might change not only the investing world, but potentially even your app and involvement?
Yeah. I would say first off, keep in mind that I view trading as something very different than financial planning.
Right.
So first off, trading is trading, and financial planning is getting your financial house in order. And that includes estate planning, income tax planning, retirement and investments, includes trading, but saving for kids' college, budget, everything else. So that's the first thing. I think the biggest takeaway I've had over the last couple of weeks is, oh my goodness, we need to educate people more about finances. And yes, that includes trading, that includes the markets, activity in the capital markets, how hedge funds work, everything. We need to promote more financial education to the world. And there's really no great way to do that. And so the only way to do that with scale is through technology. So I hope we can help with that. I mean, I hope that this mission we have of bringing financial wellness to the masses can be something to help educate. With the trading going on, that's fine. Like that is what it is. But again, I don't want anybody to be making financial decisions, real money decisions, without knowing how that impacts everything else: retirement, savings for kids' college, all the other things, that having an emergency cash reserve. I want people to understand that there is a path to financial wellness, with financial wellness being sleeping at night, knowing that you have everything in order. Doing risky trades may or may not be a part of that path, but if your entire financial house is in order, then you can make the decisions of whether or not you want to participate in risky trading.
Well, I think it shows a little bit of where people are at. People do like DIY. They like, getting information from social cues of other people, and whether it's stocks, but like you said, education, all those elements of financial wellness, I think, are impacted by that idea of DIY, and social influence, beyond just the stocks as well.
Yeah, for sure, Andy. And we see that more and more as the generations emerge, that's more frequent among younger generations than older generations. The stat I love is that 67% of millennials get all of their financial advice from two sources: Facebook and Twitter. If I share that stat in a room of millennials, nobody comments, nobody says anything, we just keep going. If I share that stat with anybody my age and above, people laugh, people think that's the most ridiculous thing ever. Those two are not financial sources, but obviously people are looking for that DIY. They're looking for that education on their own through social media. So we have to meet the next generation where they are.
Yeah. The gurus that are out there, that are Instagramming about how to, I mean, it really does exist. So that's interesting.
For sure.
Yeah, along those lines, I'd be curious, in this past year going through the pandemic, I think a lot of people have focused in different areas. Obviously, a lot of financial uncertainty and rockiness in a lot of cases. And I think a lot of people spent time doing different things than they had in the past. Part of that is starting to examine and say, hey, I need to get the things in order. How did this past year, going through the pandemic, how did that affect things from your standpoint?
Yeah. So we engage with two markets, right? The end users, which is the individuals you're referring to, Tony, and then the financial institutions. We are a tool that helps people with financial wellness by helping them engage and helping the institutions engage with them. So because people have not been physically walking into their banks and their credit unions, the last 12 months have been good from a business standpoint. We were sort of built for this environment to help people engage over technology. With those two segments, the end users, yes, people are looking at their finances more now than they ever have. There's a lot of stats out there about people saving more than they used to. I think there's a lot of fear, obviously, going on. And so we, just as human beings, we want to get that financial house in order. We want to get our things in order. And we've had the time, right? We've had the time at home, a lot of time at home to do things that maybe we haven't had time to do before. So yes, people are asking for and looking for more tools to get their finances in order. On the other side of that piece, those financial institutions, as I said, they're looking to engage over technology. What we've seen is a lot of the banks and credit unions have taken their potential future spend on technology, and they've front loaded that up to this year and next year. We literally talked to a credit union who took their 10-year spend, and they're spending that 10-year budget over 2020 and 2021 on technology. So they took their 10-year tech budget and brought that forward to 2 years. That is just mind blowing to me that, these institutions, I think I think there's been there's been the thought over the last 5 to 10 years of, we know we need to do more and could do more from a technology standpoint, but we sort of don't have to. And I think what we've learned over the last year is you have to, and you have to do that now. And by the way, you can do that. So we're learning, I think the institutions have learned that end users that they thought, their customers that they thought would never use technology to do deposits, have learned that they've had to do that. And so, we're doing that.
I'm curious. We've talked to a couple folks that are B2B2C, and I'm curious about like roadmap and thinking about features and where the product goes. Is there one audience that's more of an influencer, your customer versus your customer's customer? And, and it's an overbeaten analogy, but if people ask what they wanted, they'd want faster horses and cars, and so that's where I'm kind of asking, is it who's driving the thought process of the product, and do your customers really even know what their customers need, and do the customers even know what they need, and how do you balance all that?
Yeah. I love that you used I'm in Detroit, so that was a Henry Ford quote. If I asked people what they wanted, they'd say faster horses, and I love that. So first and foremost, again, we're a mission-driven company. We're trying to bring financial wellness to the masses. So yes, our customer is the financial institution. End users don't pay anything, but they're at the center of everything we do. We're trying to deliver wellness to people, period. The way to do that is through the financial institutions they trust and they've been working with. So first and foremost, people and the user experience is at the center of what we're building. What drives product and product roadmap is that first and foremost. So we're doing a ton of user testing all the time. We're finding out what works, what doesn't. And then, yes, we also talk to, our customers to see what is working for them, those financial institutions. What else do they need to see? But we're always telling them, look, you do your superpower of the financial solutions you serve. And our superpower is knowing millennials and how to engage millennials with finance. So every institutional customer we launch, we start with an engagement discussion of, how to engage with the members of your credit union, but we know how to engage with millennials as it comes to personal finance. So we have discussions about what those marketing campaigns and those marketing tools look like.
Do you ever have customers that expect you to change the software or, adjust it to their needs or what they think is right? And how do you handle those situations if it's ever come up?
We've built the software to be very, very customizable.
Okay.
So from day one, we knew that, a Northwest Mutual would want some different things than a local or smaller credit union or community bank. So we built the software to be very customizable, mostly from an integration standpoint. So, the really large institutions want all the data that we bring back to them to go inside of their, like a Salesforce or a CRM. The smaller institutions are happy to use, our admin panel to learn more about their customers. So yes, there is some customizable ability to what we've built. Have I had? I'm thinking about one prospect along the way who was pushing for something so different than what we were doing that I think we kindly just realized we probably weren't a fit, and they were probably looking for a different tool altogether. So yeah, especially being a startup, I think you have a lot of conversations with prospective customers that are like, you should do this, and you should do this, and you should do this, and give it to us for free. And you sometimes have to say no.
Well, and that's kind of my question is that's a lot of our audience is people that are in that startup phase, and how do you handle those situations where people want you to make changes that aren't part of the vision, but you're maybe even hungry for cash and for customers. And, from our interviews, I've heard, there's some folks that take the hard line and say, this is my vision, and others that are willing to pivot and change and maybe maybe they'll learn something new. And I don't think there's a right answer, but I'm just kind of curious your experiences and perspective.
Yeah, I think there's, yes, to everything you said. I think there's a fine line between, well, I don't think, you know, as founders, I think sometimes we have these visions, and if you stick if we live with our heels in the sand, like you're not going to, if you're so stubborn that you can't listen to what your customers are asking for, that's bad. That's a recipe for failure, right? So it's this fine line of listening to the asks, digesting it, maybe researching and processing it, and even, you know, having discussions with other prospective customers of, is this something you would want to, you know, so I think we have to listen to that feedback. We have to see what people are really asking for too, because I think that's something else that I've come across is, I want a platform, I want something that does this. And when you ask a lot of questions, you learn, no, you don't. What you really want is, you know, more customers. And so you don't care how you get those more customers, but we need to talk about that. So yeah, I think there's a fine line between, it's a decision we make, you know, constantly of, do we want to go for this one customer? They're asking for this thing. Is that different than who we are as a company? Is that different than our mission? And we know, you know, I think at the end of the day, you know, if you're leaving your vision, leaving your mission, leaving your company culture to give something to someone for revenue, we haven't had to do that.
What about mentor feedback? Because that's the other that I've seen is stubborn founders that have an idea of what their product is. They go and find mentors. The mentors have insights, and then, you know, they don't pay attention to them, or they push back against it. Again, I think it's all about balance, but how do we help people find that right balance of, when do you need to open yourself up and listen, and when do you need to, you know, stay committed to the vision that you have? I don't know if you have any thoughts on that.
It's
not easy.
It's not easy. And I think, I mean, I love how you said that. When do you need to open your mind and listen? The answer to that is always. You always have to listen to every piece of feedback. But you have to then process it and talk about it with people you trust, if that's your team, or to process it, right? To see if it's a good path to follow. I have seen a lot of founders who I think are just so, they don't listen, or they're so stubborn, and that turns everybody off, and you lose the ability to learn what the market's asking for. So it's so hard, because as a rule of thumb, I think someone who starts a company tends to be a little bit visionary, and sometimes that comes with some arrogance of, I know everything, I don't need any advice, which can be a strength at times until it isn't. But you have to just let it all come in, and accept that feedback, and accept those no's and that rejection constantly to keep going.
I'm curious, you mentioned you don't know what you don't know, which, are you familiar with Jahari Window? Is that potentially where that came from? Okay.
No,
There's
but that's
great,
interesting.
for you and for other folks, go check out Jahari Window. It's about your blind window and your hidden window. And you want your blind window to be opened by people sharing things that you don't know about yourself. You want to open your hidden window by sharing things that you don't normally share. And by doing that, both of those kind of move, and it expands the what you know that you don't know. And so there's a whole theory around this blind and hidden window. So worth checking out if you get a chance.
I will. That sounds fascinating.
So you mentioned, and you briefly touched on culture, you talked about your mission. And so that seems pretty crystal clear for you. We talk to founders quite a bit about, how do you articulate that mission, vision, and create that culture that you're striving for through your team? And like, how do you implement that? How do you take the vision and turn it into work to turn it towards a reality?
You don't rush into hiring people who aren't a fit. At year and a half it took to bring in our CTO, and almost 2 years to bring in our chief marketing officer, although she was working with us part-time from literally day one. I have complete trust in the two of them that they want the same culture that I would want. We talk about our culture all the time. We just had a conversation about an hour ago about something new we're going to be doing that the CTO brought to Ashley and I about, we should be doing this from a culture standpoint, not because it solves a problem we have right now, but because as we grow, we want to make sure to keep this culture. So I think you just have to be really, really intentional about. It's like parenting. I've got 3 kids. It's like parenting. You have to, be intentional about what you want out of, what you want for a culture. But I couldn't. It's so beyond me. I couldn't have done that without having the right people on my executive team that want the same culture and recognize what's great. And you have to be really. I think really vulnerable with one another to acknowledge that, we're in this together and we're working together and what culture do we want together and that sort of thing. We communicate a lot. We talk a lot.
That's cool.
Go ahead, Tony.
No, I was just going to ask real quick, kind of along those lines, do you have anything you would share with other founders as far as what you've learned? Because it sounds like you've made the right hire in some of really key roles in your organization. So how did you, and it might have been through experiences where you didn't, hire the right people. At other times, what are some, tips you'd give in finding people that are a good fit?
I think you just have to give it time and give it work. Work meaning every conversation I had before I hired anyone was, I'm looking for X, Y, and Z. And again, that being vulnerable by sharing your needs with every person, you're having coffee with. And when someone says, what can I do for you? You're answering, well, I'm looking for this. I'm looking for this. I think, that's how we got the team we got. But again, you can't rush into it. I would also say, I think in the very beginning, when founders have these ideas, we think we have to be very secretive about them because we don't want people to steal our ideas. I swear at some point over the last few years, it's been like, you want it, take it, because it comes with so much work, right? But I think you have to, again, maybe it's being a little bit vulnerable, but being confident enough to share your idea with the right people without saying, I want you to sign an NDA, without being worried about someone stealing your idea. Because if you don't do that, you're not going to find what you need. You're not going to find those people. You're not going to find those potential customers if you're not comfortable enough sharing the message and the idea out there.
Yeah, I love that. I've heard in the past, share your idea with everybody because other people don't have the time, money, or interest to do it. And you overestimate what you think is going to happen. So I'm kind of curious from the female perspective in the startup space. Do you feel that it's more of a boys' club? Are there any barriers that you think that you've faced, or for those women out there that are looking at starting a technology startup, what would you kind of share with them?
Yeah. Find your community. So find your community first and foremost. If you're a female founder and you feel like it's a boys' club, find the women. We're here. And now is kind of a really exciting time to be on this side of things because we're talking about there's so much in the startup ecosystem about supporting underrepresented founders and female founders. So it's kind of it's definitely a fun time to do that. I haven't seen this as a boys' club at all because I grew up in the finance world, right? So I spent 20 years in finance. So to me, this is no, I haven't seen it being a boys' club. I know it's there. I've seen all the stats. The stats are atrocious. They're atrocious.
Right.
2% of all capital goes to female-led founders. That's startups with female-led founders. That's ridiculous. That's unacceptable. But we're talking about it. There's some amazing people out there trying to solve it, both men and women. So we're having the conversations we need to be having.
That's good. So what's the vision for the product and for the business? Where do you want to be in 5 or 10 years with it? And what's the big, hairy, audacious goal
I always like to say change the financial trajectory for millions of people. But to boil that down to layman's terms, it's bring financial wellness to the masses. That's the big goal. Millions of people not being scared of their finances. From a company standpoint, we're selling to some of the smaller financial institutions right now, although 3 of our customers are 3 of the nation's largest credit unions. But our plan has just been to keep working up the food chain, starting with the smaller institutions and then working with the larger institutions as we grow and as we can support them.
Very good. Andy, you've had that question that you've been asking people this year. Do you want to go ahead and ask?
Yeah, so I always like to know if you went back in the past, let's say right before you started this business, you sat and had coffee with yourself, what kind of advice would you give, or what would you share with yourself to say for the future?
That's a really big, deep question, Andy. I love it. I would say, don't be scared. I mean, I think it was hard for me to embrace leaving a stable, high-paying, secure job for not that. And yeah, I would say, don't be scared. Just go for it. It's so much fun. I ask myself that question actually periodically as a mom. So like I said, I've got 3 kids. 2 of them are daughters. And I think about, if my daughters were as nervous as I was about leaving the stable world to start a startup, I'd be like, what does it matter with you? Go for it. This is life. It's so fun. Go for it. Try. Who cares if you fail? So, and fail is in quotes, right? Who cares if you don't do what you think you're going to do? So I think as a parent, I can answer that question a lot easier, which is, don't be scared, just go for it. It's fun.
Do you think it's more about the journey or the destination for you?
Oh, the journey for sure. For sure.
That's great. Awesome. Well, thank you for joining us. I think it was a great conversation.
Thank you. I appreciate it. Nice to meet both of you. It was a lot of fun. Thank you.
Fantastic. Thank you so much, Jessica. This was outstanding. I would just encourage everyone, go check out PocketNest.com and see what Jessica and her team are up to. It's pretty awesome stuff. So again, thank you for your time today. And thanks to everyone for tuning in. We'll see you next week.
Thanks, guys.
Thanks, Jessica.